Alright, trader cap. Today with a profitable trade, and yeah, I was on the Nasdaq. Now, first things first, I have to be honest. I wasn't taking it all the way down from here on because I missed this move because I was also doing something else. Um, I'm slowly trying to build more the habit to stay like on the markets because I just recently observed and realized that I'm too much, biased regarding the time. But it doesn't mean, or like in other words, you should not trade by time. You can use it as an indication, of course. It might help a lot in terms of fake outs, news, etc., etc. Like, London session open, the fake out, what is the London session doing, accumulating, and then maybe the New York session is going to start a distribution or manipulation, yada yada yada. But I was too fixated on that, and like, after 10 a.m. or something like that, or I was like too much being off the charts or like not paying too much attention. Now, that also brought me to the conclusion and literally made me to realize and to connect the dots that you really have to treat this like a business. Because in a business, you're not waiting on the prime time, waiting for doing your work. Let's say perhaps for clients or for ecom on time XYZ, you probably get the most sales. Blah blah blah. And only monitor that. Also, the gaps between, like gaps for me. It was like some sort of gaps, because then you also can catch moves like these. Also, yesterday on gold, I was like a bit like pretty much in the middle of it from London session and close to the New York session open and stuff like that. So where it makes sense, of course, be careful when you literally open before open, because manipulation. But always, as I mentioned, like before, not always, but use it more as an indication and not trade solely on the fake outs. Now, anyways, I tried to trade gold to take a short, but we can see gold is relatively iffy. Now it might go to the downside, but I still feel like it's going down. How far, I can't tell, because we have like um one more Eval right there. And the thing is, the market's conditions are a bit like they're a bit too uncertain, not clean enough, a bit too choppy, as you can see. So at this point, it would be like the wisest to take your hands off gold, because it's a bit iffy. We have here a very choppy price action, then this move to the downside, a lower high, then here a higher high, a bit confusing for a few people and stuff like that. And I thought, yeah, potentially this would be a short from the sweep right there on the 5 and 50 minutes, which take out the Asia highs in the London session open and target one of these very choppy lows on the 5 minutes, maybe even go down to the 1 minutes. I was before targeting this one, but I just closed it because it was like, yeah, it might go well, but it's a bit too odd and choppy, and I don't like to trade uncertain markets. But I was able to take like a quick scalp, but like a tiny one. Now on the Nasdaq, I took this little short. It literally did not take out this low. We didn't even get equal lows. But to be honest, I only want to try it out how this to trade on the 1 minute as entry, because I never use the 1 minute. Like generally, I only use it to when I have already opened my position based on the high time frame, low time frame, and confirmation and entry model. Then to scale down to the 1 minute to see how it does. But I feel like it's pretty much not necessary. Now, anyways, now it's like pretty much the same, similar thing on the Nasdaq. It's still like consolidating, a bit choppy, but it's more like on the larger range. So when it is on a 1 hour, let's say clear enough, you can still do the moves. Like one example, we have here a 1 hour for valid gap. It was going to the downside. I didn't know where it gets like genuinely validated. Now it seems like it goes to the downside. Perhaps you get like a rejection right there, a little one, or in terms of a retracement. But for now, I think the case is so far clear. We have here a clean fair value gap. It was going to the upside on the 50 minutes. We saw here, and then this sweep from this one could have been potentially the deal. But, besides that, we don't have enough, like, you kind of see it. I mean, when we get a sweep from this one, yeah, that's fine. But we have also this lower high, this point of liquidity. So entering of this level is, for my taste, really too uncertain. While we have here a swing high within this fair value gap, 1 hour fair value gap, then price is going up again close to it, uh, seeing it gets failed, almost forming a bit of a resistance. And with the 1 hour fair value gap, and seeing taking out all these fair value gaps here from this little distribution on 5 minutes, this, and also, on the 50 minutes, this gave me like the certainty to go short. And we are up today $355. Now, perhaps I kind of miscalculated something regarding the consistency rule, because you can see the first day on the 9th, I took a fat loss. On this day, I allowed myself to be very stressed and very pissed because I had to go to the Bureau of Unemployment, to get unemployment money and help me to find a job. It turns out probably I won't get that money, so it's pretty pointless I was going there. But anyways, I allowed myself to get stressed out, and more importantly, I had also too many negative thoughts, probably accumulated during the past months. But then, by the blink of an eye, I tried to fix it, and since then, I feel better. Also, ironically, reflects on the charts. But yeah, I think I need more volume of these size of profits to get the consistency right. Like, the consistency, just the consistency level. The consistency rule, I forgot what it's called. And right now, we are able actually not only to get break even, but now we are even up in the whole account, which is good. But yeah, you can see the consistency is absolutely terrible. We have to get rid of that. We have to fix this. So, I don't know if we will get over this when we consistently make these kind of profits, because when we keep making like profits in the range of $300, $400, then it's going to take more days, which hopefully fix the consistency, the whole consistency rule, because otherwise I won't pass the eval, unfortunately, because of that, or I guess I won't pass because of that, which would be pretty unfortunate. But yeah, we will see. I'm going to keep trade like that. Maybe take a bigger trade, taking a bigger win in case if it's a bit too uncertain. But yeah, and even so, I also see we could have also taken out this low. But yeah, we don't want to be greedy. I wasn't even able to get all the way up here, because if I would have entered here, I probably at least would have wanted to see, how far it goes down, because this is actually a good point of interest to see price retrace into this 1 hour for value gap, the bullish 1 hour for value gap. But yeah. Regarding that, staying like literally actively monitoring concentrated the markets. I just recently, interesting enough, got aware of that like yesterday, and now the next things comes. The first thing I would say was getting rid of the fear with the first Eval account ever, and now I would say the next goal, which I get aware of, so I can give myself as a goal to be more consistent with the monitoring and not being like mentally too off, if you get me, because otherwise you perhaps miss some moves, etc., etc. And I really don't do stuff like that where, okay, I see, it was good, because I see some people that trade like, we had like some, I don't know, 5 or 15 minutes entry model, or not entry model, but some confirmation, and then they wait on a 1 minute and they enter off that. That's really not how I trade. I can't trade like that because I don't like it. There's something like this, it's always how I've been trading, where I was like building my proper strategy. And yeah, so with that being said, cheers.